So we had a Euro USD, had taken out this liquidity pool, right? And we had left the higher liquidity pool untapped, right? So, and during this leg up, we've been breaking highs, right? Rejecting lows right here, and breaking highs, and respecting bullish PD arrays, right? So, breaking highs, rejecting lows, respecting bullish arrays, right? So what that means is that we were expecting higher prices on euro, right? So we draw this rejection block. So we broke this high, right? We broke this high. And we're expecting any dip with P below the low to be a false move. Why? Because in a bullish market, bearish dumps below lows are to be bought, right? And in a bearish market, bullish pops above highs are to be smacked back down, right? The opposite over here. So bearish market, so a downtrend, bearish order flow, whatever you want to call it. You got this. Highs rejected, lows broken, right? Lows broken, highs rejected, right? And over here we have the opposite. We have highs being broken and lows being rejected. After a long, just 1 month, 1 month of a downtrend, or 1 month of a bearish 1 month of bearish order flow, we finally have started to break highs instead of rejecting them, right? So reject, break, right? So bullish order flow, in short, right? So we mark out this rejection block right here. And if we come below it, right? If we don't close below it, because if we close below it, it's going to be a breaker, right? Bearish candle to cause the purge, right? So it's a rejection block until it's closed below. Then it becomes a breaker. But because we're in a bullish market with bullish order flow, we're expecting the declines or dumps below lows to be for buying, right? Especially that we took out this range low liquidity pool, the body, and we hadn't yet taken out the range high liquidity pool of the body, right? So I had this target in mind, at least the range high of the body, right? Potentially this, but this one first, right? So what's been happening so far? We've been rallying, breaking highs, rejecting lows, right? Breaking highs, and then falling down beneath a low, which means we're expecting it to be a fake move below the low to keep rallying, right? So we mark the opening time and closing time. The same old boring procedure, right? Nothing new. Closing time. So we had this, we came short of the key level. You remember the last video where I spoke exactly about this phenomenon, right? Where you violently come and approach a key level, but not yet touch it, not quite contact the level, right? So violent rally, coming short of a key level, right? Making everyone think that the bottom is in, the top is in rather, right? So rally, didn't touch the key level, which is a liquidity pool, right? And then decline, lowering the participants of the market into thinking that maybe the rally is over, right? Now, why was this a target? Why this rejection block, because those who were short down here, up here rather, where's their stop loss going to be? The stop loss is going to be above this body. How do I know? Because when I would trade before ICT, right, the retail logic and theory tells you to put your stop loss above the bodies when there's a large wick. Now look at the indoctrination that's happening. So in retail logic, if there's a large wick, you literally put your stop loss at the body of the wick, right? And that's what a rejection block is. So retail logic told you, let's clean this up. Retail logic told you to put the stop loss right over here at this body. And what happened? We reversed from the place they are taught to put their stop loss. So same logic. The stop loss was this rejection block, and if you would like to be fascinated by price, then go and study rejection blocks, right? They're a good PDRA to use to anticipate a turtle soup from. So anyway, opening time. So all this was was in the intro, huh? Now we come to the trade itself. Opening time, closing time. Higher time frame PDRA, daily rejection block to the downside, and a target, because we're bullish, right? We've been bullish all this while. Breaking highs, rejecting lows, right? Breaking highs, rejecting lows. Up close candles being broken, right? And down close candles supporting price to go higher. Right? That's the definition of bullish order flow, right? So we have the two PDRAs, which are limiting price, so to speak. We have one here as the target, and we have one here as a potential low of week area. Now, I did expect it. I expected it to go a bit lower, right? Possibly turtle soup this low. But when I saw this rejection off of the daily rejection block and the 4-hour FVG down there, right? 4-hour FVG right here. You blend this with an OTE, right? And you get exactly what happened. So, remove. We declined violently after the weekly open. Right, weekly open, short. I got this sell over here, the one we reviewed in the last video, right over here. So as we've mentioned, as I have mentioned, the weekly candle or any candlestick, we focus more on the weekly and daily and 4-hour, which are the kill zones. Why? Because they simply they offer a good enough range to be tradable. So you don't want to be open, high, low, and closing 5-minute candles with 1 second charts, right? You can do that, but it's not ideal. So each candle has 3 trades: the open. What is this? The open, the low, and the high. These are 2 guaranteed trades, right? Which is the low and the high, or the high and the low of a bearish candle. Because price is going to reverse. It's going to go open, high, low, and close, right? In the 6 different ways, which I've mentioned on Twitter. I will retweet that tweet after this video. So each candle has 2 guaranteed trades: a reversal at the bottom and a reversal at the top, right? And of course, an OTE in the middle. That's read number 3, right? So opening time, and then we decline. We decline violently, and the more violently you decline into a key level, the more likely it is to hold, right? In my experience. So you can go and study that. So when I see a key level being hit slowly and drifting towards it slowly, then I don't like it. When I see a key level being hit at the correct time, violently, then that is what I like to see personally. So we decline, open, low, and then we rally, right? Now, because the overall market is bullish on the daily, we're respecting daily bullish PD arrays, right? So this can be a turtle soup, the weekly low, one shot, one kill, a turtle soup at the weekly low, which happened at the daily rejection block, right? Now, and it declined over here. Look at the fractal nature of price. So the same way we reviewed this trade, right? The trade before this video, this was the trade that I reviewed and took last week, right? So the same way this climbed up in a market maker model formation, right, on a lower time frame into a higher time frame PD array, the same way this happened on the 5 minute, the same thing is happening on the 1 hour. So we're declining into a higher time frame PD array in the shape, let's move this noise. So we're declining into a higher time frame PD array in the shape of a market maker buy model, right? So the shape alone doesn't matter. So I've combined multiple things. I've combined the daily order flow, bullish, yep. Combine that with a rejection block, with an OTE, with a 4 hour fair value gap, with a decline from the opening price, right? So you blend that together and you can narrow down the chances of price, of the directions price can go. So if price declines in the shape of a market maker buy model. Now, a disclaimer, I was expecting it to go a bit lower, as I mentioned in the video. But when I saw this reaction off of the rejection block, then you can pretty much forget it, right? There's no way it's gonna go above this. There's no way it's gonna go and create for you this 4 hour fair value gap, right? Trading through this candle, which is a breaker, correct? So we have a low, a high, a lower low, and a higher high. As soon as we close through the breaker, right, it's confirmed as a PD array to be trusted, and the stop loss below the intermediate term low, right here, and target is the original consolidation, which is also the daily rejection block on the premium end of things, right? So that was the idea. That was the idea I had about this specific trade, and this is what I had in mind when I posted this trade right around here, right? So before it rallied, I recognized what was happening, which is buy model declining from the weekly open, price and time declining into a higher time frame PD array, and then rallying, right? And then respecting a bullish PD array on the 2 hour and the 4 hour, right? So when I see that happening, when I saw that happening, rather, then I posted right over here. I did miss so I caught this move down here, right? I missed this move up here, and I caught this move from here to here. You see? So you don't need to, and later on, of course, I caught this turtle soup up here, which will be reviewed later on as well. It was very clean. Or if you want, you can go and look into it yourself. It's a very clean, obvious turtle soup setup to cap the daily range, the weekly range, right? So trade number 1 is down here, and trade number 2 is this one to cap the weekly range. So that was the thought process I had during the whole, when I posted the idea of euro attacking those relatively equal highs. Look when I'm considering them. Again, I don't mention relatively equal highs just for the sake of being relatively equal highs, right? It has to be within the context, within everything. All those confluences are stacking up and adding up, leading to this idea. Now, maybe it sounds complex at the beginning, but it's just it's second nature. So it looks like a lot of stuff. It looks like a rejection block, FVG, OTE, price time, all this mixed together, but it's pretty simple. It's a very straightforward procedure. The main idea is the higher time frame PDRA, right? So the main takeaway is the higher time frame PDRA over here, and the decline from the opening price, getting everyone bearish down here, and then rallying, right? The shape in which it declines is a convenience buy model, right? So the main focus was the opening time and price, right over here. Of course, opening time, opening price being used as support later on. No surprise there, right? So the main two components were the decline from the opening price and time into a higher time frame key level, right? So that's all for now. Again, these videos they always get longer than I anticipate them to be, but it is what it is. So I hope you found that insightful, and good luck and good trading, and until the next one.